Is war, like the war in Iran or more traditional wars, good? Actually good for the silver price? We'll take a look at the charts, compare them. We'll also ask things like, is there actually 500 ounces of silver per Tomahawk missile? I bet you've heard that going around, for the last 10, 11 years or even longer. Let's unpack it all with me, Joe Main. You're watching Good Morning Stackers. If you're watching this on the replay, use the time codes below to go to that part. But if you're watching live, you get to enjoy every single thing we do here, including quickly talking to our regular subscribers, doing a few shout outs, and inclusive of the synchronized slurp. That's where you grab a tasty beverage. I've got my tasty beverage. We slurp them synchronously together. Yeah, it's kind of weird. You've just come out of the blue to this random channel and here's a dude slurping a drink. Why would you do that? Well, because I feel like it's my show. Ready? Whatever you're drinking. 3, 2, 1. Let's do it together. Do it audibly. Do it now. Go. I give you a gentle slurp. I want to ease you into the slurping experience. I am Joe Main. I've been a stacker of precious metals since 2010. I've been into other investable things. I've made fortunes, lost fortunes, and everything in between. I do this show now live on Tuesdays and Thursdays and all the pre-recorded stuff in between as well, talking mainly about investing in stuff that is investable and doing it for yourself, doing it for your family, etc. Of course, gold, silver, precious metals. I've had a long history in that. I've worked for 3 major gold and silver bullion dealers here in Australia, but I've more recently-ish dipped my toe into the stock market, etc. And, we're doing all right at the moment, going from overvalued to undervalued. So I'll talk about any kind of asset. I'll do crypto too, whatever it is. But today's topic is about silver and war in particular. If we get a chance to look at the charts as well, we'll do that. And I'll also do some chart requests too. Again, use the time codes below. Can you do me a favor though? Head over to x.com/It's Joe Main. I want you to go over there, hit the big follow button. Of course, hit the big red subscribe button on YouTube as well. But let's do this thing. I just want to do that. And I'll do that, and I'll do that, and I'll do that. There we go. Thank you. I appreciate it. And of course, you can head over to Facebook as well. Facebook.com/It's Joe Main. No, Facebook.com/Just Joe Main over there. Add me as a friend and we'll have a good old discussion over there too. And of course, as you know, I'm an enrollment advisor over at Mastering the Markets, masteringthemarkets.com. I'm doing their year-long comprehensive course, and then they were looking for enrollment advisors. And I went, well, I love this course so much, I want to work for the company too. So head over there and find out more about their market analysis and trading analysis courses, basically technical analysis foundations and all the intermediate and advanced principles as well. I'm doing that, and you can head over there and send me an email, joe.main@masteringthemarkets.com. The show is brought to you by Perth Bullion Exchange, perthbullion.com.au, best bullion dealer in all of Australia, Mastering the Markets as well, and Stormrake, stormrake.com, a full-service cryptocurrency brokerage. Yes, I told you to hit the time code. It's very simple. Buy silver, crystallized osmium. Yes, like and share. Morning, Joe. Morning, Stackers. Good to see you. Quick couple of shout-outs, then we'll get to the topic of the day. Luke, it's been ages, man. G'day, Luke Nutters. Any chance of looking at COL? That would be Coles Limited. Possibly, if we get a chance. Good morning, Joe and Chris and everyone. Jason Razana, good to see you, dude. Nick is here. Morning, everyone. Morning, Stackers. Lovely, good to see you, Silent Stacker. Let's take a look at if. Let's start that again. What the fuck was that? Is war actually good for the price of silver? Let's take a look at the chart. We'll answer that question. Is there 500 ounces of silver in a Tomahawk missile? All that kind of stuff. I've had comments on my YouTube videos, people very adamant. It's 500 ounces of silver in each Tomahawk missile, in the head of each Tomahawk missile. I'm like, yeah, is it really? Let's find that out. And we'll just sort of a general plot of wartime stuff and the price of silver. Let's go do that. I'll head over to here. And now we'll take a look at the price of silver. Now I'm looking at this on the monthly time frame, priced in USD. Let me get that. It doesn't matter. And it's currently the price is at, out of interest, $85 US, but we're just zooming out And I need to do the line graph. And the line graph plots the closing prices, not the peaks and the troughs. Okay, so on the monthly, it's just not going to include the peaks. All right, so that's why you can see, for example, here $48, but back in 1979, 1980, 35, but because we had those big spikes. Okay, so they ignore the spikes, but I wanted to do this because of the line graph. It shows you much better the kind of the early 1900s. Cool. So let's just do a quick little general longer modern war period time scale, and then what the silver price did at that time. Is there any sort of decent confluence with that? So pretty simply, we'll go to not World War One. We'll take it from World War. Well, he's actually, no, that's the Great Depression. No, 1929, that's the Great Depression. World War One was like 1914-ish kind of area. So, yeah, a little bit in there, but let's take it from 1939 to 1945, roughly, okay? There's that one, 1939 to 1945. Well, yeah, you can definitely see some confluence there. Cool, and I'll pop this on. Yeah, shall we keep it as red? Do I really care? Anyway, we'll do that. Okay, there's that. So 1939 to 1945, you can see definitely silver had a bit of a run during that time. We went from, 35 cents to like nearly 80 cents per ounce. Of course, that's not inflation adjusted, right? That's just the nominal price, but yeah. Anyway, not that you'd be holding since 1945. There's some people maybe passing it down through the generations, but yeah, you can see that definite tick up in there. Now the next kind of major one, and you can see, look, here, the thing is, we'll come back to that. Let's plot them out. So then you've got the Vietnam War, but now the Vietnam War was from 1955 to 1975-ish, roughly 73, 74. But that's the entire war. It's not, the US didn't get involved until around about 1965. So we need about 1965 to 1973, I think it was technically. So let's take a look at that. Where's 1965? There's 1965. Cool. Simple plotting it out. 1965 will be close enough for jazz. Where are we? 65. Get in there, Joe. Round about there-ish. Cool. Until about 1973. So there is right about there. Okay. All right. Now the next major one, we're talking about the Afghanistan war. You'd probably say is the big one. That's 2001 to 2021. Technically, I won't go into how we how the US removed themselves from that. That was a bit of a muddle up, wasn't it? But 2001 to 2021, 20 years, guys. 20 years. So 2021 is around about there-ish. Cool. So those are the three majors. Now, if I'm missing any, let me know. I think they're the three majors. Okay. World War II, won't include World War I. World War II, Vietnam War, Afghanistan War. So what you can see, there is a correlation for sure. You can see that. Definitely during the World War II, okay, during that period, well, it was a pretty steady increase. Now, what I would say from there is, well, the war finished, but then the price did not continue, didn't go, the war's over, happy times, less volatility and, less danger, more of a risk-on environment than a risk-off environment. The silver price actually continued higher. So I don't know. I mean, that could just be a decent correlation, but not being causation, if that makes sense. Now, in 1965, in the Vietnam War, yeah, it's actually here. So the Vietnam War started here when the US got involved. So there wasn't a big spike on that. It actually wasn't until about 1967 that we saw a big spike. Okay. And we saw that from $1.30 to $2.50. And then during the height of the Vietnam War as well, actually seeing the price go back down as well. And then, yeah, so I can't really call that, price go up, price go down. I can't really call that too causational, really. I think it just happens to match with that. Now, of course, what happened in 1971, all right, so 1965, US gets involved, top there, 1968 roughly, and then silver heads back down. And then, now this thing, look at this correlation. Now, very, very smart people already know, not even very smart people in the know the reason why silver, and in particular gold and silver as well, had a massive run from around about 1971. What's that got to do with? From 1971 and basically never headed back down to there? Well, that's because Nixon at the time took the US off the gold standard, or the remnants of the gold standard, the Bretton Woods system. So gold, the money, fiat money was still tied to gold in some way, but then Nixon took us off the gold standard, went full on fiat currency, so they could just print and create as much as they wanted. There was nothing stopping them doing it. Okay, and that's why you've seen since 1971. Okay, of course, the Hunt brothers got involved in 1980, sort of late 70s. That took the price extra high. Cool, and then we had that consolidation. Now let's come back down to 2001. Okay, well, yeah, you can definitely see a correlation within the first half of the Afghanistan war. Okay, all the way from that sort of $4 mark to the peak 2011 of $50. But then, look, that's the first half, sort of, you'd say like kind of the 2000s was known to be mainly, the height of the Afghanistan war, and this kind of still, like we're still there and we're still hanging out and that kind of thing. So yeah, definite correlation with that. In my opinion, I don't necessarily believe, I can see the correlation for sure, definite correlation. I wouldn't necessarily, me personally, you can have a different opinion, call it absolute causation. Okay, you can certainly say that gold and silver during periods of uncertainty, they are flights to safety. Gold tends to be the one that goes to first. Silver, tends to follow. I can see the correlation, but yeah, I definitely don't call it a causation. Okay, because particularly here with the Vietnam War, didn't have a big spike, and you did see a spike afterwards, but then it headed all the way back down in kind of that second half of the US being involved in the Vietnam War. And it wasn't really until Nixon went, okay, pull you off the gold standard, that into sort of the tail end of the Vietnam War, which was probably partly he took it off the gold standard to help fund that as well, getting low on funds, remove the gold standard, print as much as you want. Hey, fantastic. Not great for inflation though, hey. So yeah, I can see that, again, the correlation, but not necessarily the full causation. I can see definitely the correlation here, but I don't necessarily think, again, it's that causation. I believe it's just mainly due to normal market forces. After you have such a large rise, you have a big move down, a huge consolidation. So I tend to believe that the narrative tends to catch up with the price action anyway. Now, if I were to do, and I could be wrong here, let's see, when was that? Give me a second, let me find it out. It might be perfect correlation. When did US Afghanistan war start? Could be exact. October. Okay, so in October the 7th of 2001, known as Operation Enduring Freedom. They always have those kind of names, don't they? So that was October. Cool. So the price of silver bottomed out. And look, you can definitely see the correlation. Okay. Price bottomed out in July. Cool. Now, the price actually technically already bottomed out here in the early 90s, and that was that sort of $3.60 kind of mark. So we're already starting a new bull market, and this was here, most definitely, as we talk about in Elliott wave, or we talk about in accumulation, the three phases of the market. That was definitely already the accumulation phase. So you can see here, we'd already, early 90s, that was your one, that was your two. And then it wasn't until about October. It's close enough for jazz, but technically, it started getting into its wave 3 public participation phase in July. Afghanistan happened in October, but you can see the correlation, but 1, 2, 3, 4, 5, okay? I can see how the war in Afghanistan would help propel it, but I wouldn't call it an absolute causation, but it does do. I mean, does it actually do well? Does silver do well? That's kind of what we're asking. How does is war actually good for the silver price? Well, it was good during that time. It was good during that time, but again, it fell off. It was definitely good for the first half of that time. Yeah, kind of on the fence. You let me know what you think as well. But from 2011, obviously the peak here, and then back down. We'll take a look at. Let's go into Iran in particular, and I'll take it off the line chart and I'll pop it on the candle chart for you. Cool. We'll also do a quick bit of silver analysis as to where we're sitting at the moment as well. Now, it was February the 28th in particular that silver kicked off. So we'll talk about Iran specifically. Let's do that. Where's my fib? Let's take that. So February the 28th, that was on the weekend as well. So, of course, we had the move up to $130, the move back down to $64, and we were creeping higher and higher. And we got up to the top end here at that $95 US mark. And we closed for this weekend, as my voice breaks, February 27th. And then, obviously, that next day, I think it was on the Saturday, February 28th. That's when Trump started invading, not him personally, obviously. That's when the Iran thing happened, and then the market opened on the Monday, March the 2nd. So we actually saw Iran news, and then silver had a bit of a dump. So again, doesn't cause it, all right, but you can see over these kind of shorter periods. So I think we could confidently say over the shorter periods, like those quick in and out kind of wars, and you're not really calling them hot wars, you could see there's not really a huge correlation with it. But look, I can see that there is a massive correlation. It does seem to be good for silver over the longer term, but for a period of time. So again, the question becomes, is it total causation, or is it just happening to happen at that stage? Because again, like no wars, well, I wouldn't say no wars, but look, silver just went continued massive run here. In the 70s and 80s as well. Again, Nixon took it off the gold standard. Yeah, I mean, I hate to be that fence sitter guy, but I can see the correlation, but I don't necessarily think it's the absolute causation. So hopefully that kind of answers it for you. And I would like to give you a 100%. Oh, yeah, absolutely. Again, you can see it over the longer term. But yeah, there's certainly periods where, look at this, I mean, silver's gone through a massive run here. No wars, no major new wars or anything like that. Nothing's broken out. Silver was, down here at $11. We had that move to 17, and we've had that massive run. That hasn't been on the back of any major conflict or anything like that. Okay, so yeah, I can see it, but not necessarily causation, and particularly with the Iran war, where we had that big drop. Just there. Let's answer the question, though, in terms of what about now? Because some people will be saying, well, Joe, let me go back to here. Some people will be saying, and I'll get your comments as well, they'll be going, well, Joe, modern technology now, that was World War One. Well, we didn't have the modern missiles. We had missiles in Vietnam War, but everything's much more advanced now. So Tomahawk missiles, man, there's 500 ounces of silver per Tomahawk missile. Did you not know that, Joe? Well, the question becomes, is that actually true? Give me 1 second because I want to do this. Shouldn't probably do this while I do that, but let's go. Yeah, that's a little bit better. I like that. So let's check that out. Is that true? Joe, don't you know silver is, massively huge in wartime? Of course, they need it in all the electronics, 500 ounces, etc. So that's just massive. That's going to propel silver to $1,000 an ounce and all that stuff. Well, let's take a little look at that. Cool. Is that actually true? Let's go to here. Let's go. We'll just ask Grok. Okay. Now, is Grok the total source of truth for everything in the world? No, but let's ask it. And this has been a rumor that's been around since about 2014. A video that I saw back in 2014, and I found it again, was talking about 500 ounces in a Tomahawk missile, and I was like, really? So is there 500 ounces of silver per Tomahawk missile? Grok says no, there is not. 500 ounces of silver per Tomahawk missile. This is a persistent myth or exaggeration circulating in precious metals communities, social media, and some online forums, often tied to bullish silver narratives during conflicts like the US-Iran war. Claim versus reality. The 500-ounce figure, sometimes cited as 480 to 500 or 15 kilos, originates from older, unverified claims from around, that 2011, 2012 kind of period. Of course, what was silver doing at the time? It was in its excess phase during the first half of 2011 as well. So, the big narrative, rah, 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 silver, let's, really push it. From around 2011, 2000 sources, like Max Kaiser posts. Wonder what he's up to. He's up to at the moment. Forums or promoter hype. It suggests massive silver in wiring contacts, solder, batteries, so the silver oxide batteries in particular, and gets repeated in stacking communities or during geopolitical intentions to imply huge military burned demand, or are called destructive use. Of course, and it makes sense, right? If there's 500 ounces of silver in each Tomahawk missile goes into thing, explodes, disintegrates the silver, burns it up, it basically pulverizes it, and it's unrecoverable. That makes absolute fundamental sense, right? Yeah. So if this, then that. The question becomes, is there? And it doesn't seem to be, okay? Credible estimates from analysts, industry reports, CPM Group referenced in multiple 2026 sources, and informed sources put the actual silver content much lower. Now, it's not nothing, but it is much lower, okay? 10 to 15 ounces per Tomahawk missile. So that's what? Am I doing the math on that right now? Yeah, okay, cool. Whatever that is. Let's take it in I'll just do it in US dollar terms. Cool. 85 times, let's say 15 ounces. $1,275 US dollars, apparently, of silver per Tomahawk missile. Okay. How many Tomahawk Tomahawk missiles I'll say in current existence. Let's just do that. Whatever. Exact number. Of course, we're not going to know. Well, we're not going to know. Roughly 4,000. Okay, someone's saying 4,000. Sure. Well, we can say with reports of 400 missiles in the first 72 hours alone. Yeah, okay. I mean, it's still a decent chunk of change. Let's go 400. Yeah, cool. Like $500,000 worth of, silver tied up in Tomahawk missiles within the first 3 days of Iran strikes. I mean, I get it, but it's not a huge amount of the defense budget, is it? It's not massive. Let's go back here. So, likely 10 to 20, maybe 15 ounces, something like that. This doesn't drive massive silver demand spikes from Tomahawk missile usage, broader industrial usage, yes, solar electronics, all that AI, all that stuff. Safe haven factors matter for sure. So short answer is no, there is not. No credible claims whatsoever. So yeah, from that side of things, that doesn't drive from that sort of war side of things, that doesn't drive the price of silver up. So I guess to summarize, I can see the correlation. I don't necessarily think it's a major causation that war is good for the price of silver because of the war. I do think it tends to line up with the price action more so, if that makes sense. So let me get your opinion on that. Let's see. And then we'll take a look at the silver price. We'll do some chart requests and go from there. Those times look to correlate more with fantastic point, Anna. Those times look to correlate more with economic downturns more than wars, where you can see in the 70s it definitely tied with inflation for sure. So I do tend to agree. Half a kilo. Okay. Yeah, half a kilo is around about your sort of 15, 20 ounces. Yeah. One Tomahawk missile costs between 1.3 to 3 point. Wow, okay. Cool. Yes, get your chart requests in now. Thank you for that. I'll take a look at USL when I get a chance. Let me ask that question of Grok. Cool. Let's go back here. How much? Again, all this stuff. The problem with it is it's all classified. Pretty much, you're never going to truly know. And do you think the Defense Department, the Department of War, is going to let everyone know exactly how much a Tomahawk missile costs? But how much does one Tomahawk cost to make? Cool. Let's find out. It's not gonna give us any kind of major thing. Oh yeah, you've probably grokked it too. Recent estimates: $1.3 million per missile. Oh, okay, cited in Pentagon budget data. Cool, right? This appears to be a baseline flyaway production cost for a standard, whatever that is. 1.7 to 2.2 million average. Wow. Okay, 1.4 to 2 million range. Okay, 1.4 to 2 million, and there's about $1,300 worth of silver, apparently 10 to 20 ounces roughly in each one. That's a very, very minute portion of a Tomahawk missile. Yeah. Cool, thanks for that. All right, let's take some chart requests. Before we do that, can I just please and thank you get you to head over to Perth Bullion Exchange, perthbullion.com.au. They are the best bullion dealer in all of Australia. 20 or more items in your shopping cart in your order, mix and match. You don't have to buy 20 of one thing, but you'll get instant free shipping. Now, when I say instant, I mean it's free. Okay, they don't send it necessarily the same day, unless sometimes they do. If you pay within, a very quick period of time, sometimes they even do dispatch same day. But free shipping, sign on delivery, all that other stuff, and you don't pay for it though, like you do with those other bullion dealers. These guys are the best. perthbullion.com.au. Speaking of silver, right? So let's go to some chart request time. Good to see. The first one someone did say was, and we'll take a look at the silver price as well. So Luke wants to see coal. So that is coals. Let's go to the silver price quickly. And cool. So here we are. And the market. Perfect. The market is just opening as well. We'll take a look at what the market's doing on opening. Here's the price of silver on the daily time frame, priced in USD. $85 still. As I said in that video, in the post on Facebook this morning, on various forums and my personal page, we're still faffing around that major area in this blue box here. So we're faffing around between $95 roughly and that $82 mark. On the logarithmic scale, on the daily time frame, you can see holding as lovely support. Fantastic. Continue to do that. Great. I really like the volume as well. Volume is excellent. So the volume suggests that it's leading the price. So that's why I lean towards the upside versus the downside. And I did post the following. It's this thing. We're still within this thing here. Now, I know, as I've said before, people say to me, "Oh, really, Joe? The price can go up and down. Oh, no shit, Sherlock." It's like, yeah, but it's all to do with the levels that we have to watch out for. So get through the top of here, particularly through that spike. So that's $96.20, I think it is. That is pretty good go time, okay? So you get through there, yeah, that's great, okay? Or get and hold it as support, very, very good. If you start breaking down through here, that's not so good, okay? And that's clear support here. You don't want to start breaking below and then holding below there. Very likely then you come down. We can talk about what that potentially means. I think it is just a, excuse me, I'll take this off vibrate. That is probably just a shorter term low, and then onwards and upwards we go. Obviously, I think I know where silver is going. You do too. But on the shorter term, yeah, if you're looking to load up at lower prices, you just want to wait. You probably don't want to, if you're not dollar cost averaging and you want to wait for the perfect time, there is no perfect time, just dollar cost average. But you're in the battle here. And as we talk about in this zone, you're in the battle zone right there. And you want to wait to see what happens. Okay, so if we start falling out of here, then you know, okay, looks like some lower prices are coming. I can snap up some more at a cheaper price. Or you go, well, I don't know if that's going to happen, but I want to wait to see what the price does. So I'm going to wait for confirmation. Then it's pretty much good that we're going up. Then I'll get in around about here. Okay, so then at least you know, okay, I know the general direction it's going to go rather than being in the battle zone. Why be in the battle zone? Okay, unless you're dollar cost averaging, Don't be in the battle zone. Wait till the war is over, and then you come in later on. Make sense? Good. So that's the silver price. I lean to the upside because this volume is really good. So if you take a look here, for example, look at that. Look at that. If I do this, it probably works. No, it doesn't. Okay, ignore me. There's resistance there, but look at this resistance here. Cool, look at that. So the volume is forming a higher high where the price is forming a lower high. Cool. So actually the volume is tending to lead the price, which says there's lots of buy pressure. Cool. So that's a good thing, right? That's why I lean mainly towards that rather than that. Could be wrong. Cool. So that's silver price. We'll take a look at COL. That was the first one. And then someone said USL as well. And there was a couple of others. So, okay. Here is Coles Group Limited. This is Coles for anyone watching from the United States. It's one of your big three grocery store chains. Cool. You've got Coles, you've got Woolworths, you've got Aldi, of course, as well. But Coles and Woolies are your big ones. So here's Coles. This is interesting on the daily time frame. That's having a bit of a dip. I think it's getting. I think Woolies is killing Coles. Give me 1 second. Wow. Oh yeah. Wow. Wow. Okay. So this is Coles Group Limited. Look, you've been in a decent move recently. I'll get rid of that for a moment. So this goes back to 2018. So look, you're definitely out of that accumulation range. Cool. So you're out of that kind of area there. So it broke out. That's good. Let me do this one. Support zone. Yeah, we'll do that. So you're out of that zone there. So we finally broke out. Look, you have a breakout and a retest. That's completely normal. Okay, so it looks like we might be retesting this zone. So watch out for a retest here. And you'd also want to watch out for a retest because it looks like it would have. And I'll bet you any money you like. We're probably from here to here, see higher high. What we probably got on the relative strength index was a lower high or an equal high or a lower high. Let's check that out. Let's see, what did the RSI do? RSI. Yes, you did. Okay, so that was signaling. It was signaling to you ahead of time, and this is what learning all this stuff, like from Mastering the Markets. Again, learning all this stuff can help you along the way to know when things are getting a little bit overheated in terms of price. Look at that. You've got higher high, and you've got a lower high on the relative strength index. So that said that the momentum was being lost even though the price was going higher. That tends to signal, okay, it looks like we're at a bit of a top. We're going to have a bit of a consolidation, and we've certainly done that. It looks like we are about to, unless we fake out right now, it looks like we're about to have a change of market structure on the weekly time frame, which would suggest that we do see even lower prices coming. That's quite likely, unless there's some kind of watch out for a double bottom here. I guess we could fake out right about there and then do something like that. That's actually very possible. And if you do the following, if you double bottom here, then have a change of market structure. Change of market structure means where you are then, instead of making lower highs and lower lows, you start making a lower high, so a higher low, then a higher high, and it's at that point right there where you change market structure into higher highs and higher lows, then that's the time to get back in. So watch out for that. Cool, that's the pattern you'd need to watch out for. Otherwise, on balance of probability, you're probably going to break there, because on the relative strength index on the weekly time frame, look, you've got a bit more room to move down as well. So I would watch out for that. And the area you would want to watch out for, and I am on the logarithmic, so let me take it off the log and I'll pop it on the linear for you. Okay, yeah. So you're going to look for the zag zone. The zag zone is where you're retracing 1/3 to 2/3 of that entire move there. So you're going to be doing this. So somewhere within here, of which you are right now. So you're in the zag zone, and I would absolutely suggest you're going to get into this kind of zone here. So I favor the bottom end, and I favor around about your $18.50. You've got to watch out into here. So look, around about, it's a $1 move. Okay, do you care about a $1 move? Watch out for $19.50 to $18.50 is your major range, which I would look for support to bounce off of. Now, that doesn't mean if you get to there, you just buy, because that could just sink through. You could just continue to do that. So what you need to do is start watching for bullish signals and bullish change of market structure. Okay, that would be something like the following, where you are having, lower lows and then higher lows on the relative strength index. So what's coming down to this kind of area here, if you get into this general area and then you start turning around and you do that, and if that's off bullish divergence, so for example, where you have lower lows, okay, but if this starts flattening out like that, then that should actually be quite good. So watch out for that. But yeah, I do favor that $19.50 to $18.50 Australian dollar area. I think you have a little bit more room to go. Now, Coles is in the staples. Now, I don't know why Coles is having such a hard time, because again, if you take a look at Woolworths, dude, absolutely killing it recently. So again, they're Australia's two largest grocery store chains. So the question becomes, well, hang on, why is one going up and the other one going down? So I don't know what's going on fundamentally with Coles. Maybe there was an earnings report, no idea. But Woolies does seem to be really kicking its ass. But both of those are in what is called the staples sector, consumer staples. Okay, now we talked about this the other day. Consumer staples do really well during hard economic times. Okay, why do they do really well during harder economic times? Because you still need milk, you still need bread, you still need nappies, these are all the staples, okay? You can't help but need them, so you're going to have to buy them anyway, so they tend to do well, okay? And the companies that are in the staples sector tend to do well. They're going to be outliers. Coles is going down for some reason, don't know why. But here is the staples sector, okay? It has been doing well over the last number of years. Looks like we might be finding a base right there. So it looks like if you can break and see how I've got my, there you go. let me show you that again. Okay. Isn't it interesting? Once again, amazing Fibonacci for the win. You've got your major alert level here. Once you start breaking through on the staples sector, okay, now this is a hot tip for everyone. If the staples sector, it's called XSJ, okay, so pop that into your charts and watch it, okay, XSJ, and if it starts crossing up through 13,000, now it's not a price, it's a, I don't know what you call it, but it's like an index for the staples sector, right? If it starts crossing up through there and holding through there, particularly if you close a month or even a week, I'd say, but if you close like a beautiful close candle above there, right? Not probably great for the general economy. That's probably going to be signaling tech stocks and all that going down, but staples tend to do well when you're in bear markets in the general economy. Okay, again, for those reasons I said, because everyone needs nappies and milk and all that. You start seeing that, you're going to be looking really good for the staples sector. Now, where is that alert set? At 13,000. What does that tend to, where does that correlate with? Pretty much exactly from this high and this low and this high. What do you know? It's like right on, bang on the 0.236 Fibonacci. So right here, let me get rid of all that. You can't see that. We had from this move and this move, we came down to test the 0.5 Fibonacci exactly. That is called neutral support, but it's still very good support, okay? Very strong support, neutral, weak support. Sorry, neutral support, weak support, very weak support. So if you started getting through here, you'd be concerned. But because we've bounced off here and now we might be getting through here, that's very good for the staples sector. That would be very good for your grocery store chains. That would probably coincide with Coles having that dip. Here's the thing. If you were going to go, I want to buy into a grocery store chain stock. What would you choose? Would you currently choose Woolworths, which has had a bit of a decent rise, okay, and will probably still continue to do so? Or would you choose Coles, which is it had its time in the sun. Now it's having a bit of a dip now. If it comes back to that $19.50 to $18.50 and does not sink through there, okay, you got to check what's fundamentally going on with the company. If the company's fundamentally sound, there's no reason why it should be getting down through there and going lower. I would hazard a bet this could be a very good buy coming up for Coles. Again, based on the technicals, not based on the fundamentals of the company. Someone smarter than me who has the time and the effort and the want to look into the fundamentals of it, tell me reasons why it's still fundamentally really good. Should be. So that would be a really nice area in here. Watch out for that specifically. Cool. That was a long one for that one, but I needed to show you everything else that I needed to show you. Let's go to some more comments. We had someone asking for USL. Sure. Hey, Joe, can you look at USL? So USL is Unico Silver Limited, of which I used to be in, of which I'm not currently in. USL. Cool. USL. Unico Silver Limited. This is on the linear scale, priced in Australian dollars, 87 US cents. You can see on the monthly. Look, it's good for the longer term. The miners are going to continue to go hog wild during this next silver run. We're just in a little bit of a consolidation period at the moment. And that consolidation period might last for a bit, but I'm telling you now, unless the fundamentals of USL tank because something happens, a scandal, they don't have what they say they have, whatever. If the fundamentals are good, you're going to see this continue to absolutely rocket. Okay, and we're talking in a precious metals miners run. We're not talking double. We're not talking triple. We're talking your potential, your 5 times, your 10 times, possibly 20 times for specific ones. It depends on the stock. What's the market cap of this? It's getting up there. I mean, it's a $500,000 thing, but I mean, 4 times, 5 times in a precious metals mining stock run? Absolutely. Okay, so it's got a long way to go. But on the shorter term, so if you're buying for the long term, yeah, just get into your precious metals miners now. Don't sweat the small stuff and just do it. Okay, Nike, right? However, if you're looking to hawk it for shorter term because you want the best possible entry, then where are we sitting? So you had that bearish divergence. So that's playing out. Higher high, lower high, and it looks like you may have potentially played out the entire move. That's the 1, 2, yeah. So there's your perfect Elliott wave, pretty much your accumulation, public participation, excess phase. Where are we? But we'll do it in the Elliott waves. Cool. 1, you prick. There it is. No, 1, 2, 3, 4, 5. Okay, and then we're having that consolidation. So from this low and this high, it seems to be that. Let's go from there to there. And we've so far bounced off the 0.382. Right in there. So there's the zag zone from that low and that high. And we came back to test previous support. Cool. We also, and I've been learning about this as well, we might be in a potential flat correction here. Let's see. There and there. Came up to the 786. Okay. So you still have some potential room to move down. I definitely wouldn't say we're out of the woods here. You could definitely come to like a dead cat bounce type of situation and do that, and then some kind of flat kind of thing going on, or an ABC, get into this area. So still watch out for this zone here, anywhere between your 75 cents to 50 cents. Roughly. I wouldn't assume we get down to the 50 cent range. I would say if we do see lower, then you're going to probably bounce off here at your 60 cent kind of range, something like that. What would suggest that we're not doing that? Instead, we're heading onwards and upwards. It would be very simply break out of there. Actually, no, hang on. More confident. To be more confident, I'd say out of there. Let me get rid of that and this zone. Right there. Yeah, see how we had a tease of it? And then we came up and then we fell back through. So we need to see it get and hold through and previous support right there. So you're sitting at, call it a buck. A buck even. Can we do that? Psychological value. It's close enough for jazz. Yeah, so call it a buck. Get and hold through $1 Australian. Hold through it. Great. And that just means that correction is probably over for a bit. The one thing you would have to watch is when we get up into here, is this still some kind of flat correction where it takes out the high, takes out the low, and then fakes everyone out. So you could still get into here, particularly if that goes with the silver price, which we've been talking about, it potentially getting a little bit higher and then going through a larger wave 4 correction on the longer term time frame, on the weekly and the monthly. So you'd be good for a small term trade, at least, right? So through there at a buck, watch it up in here. Got to see what it does here. It kind of fakes out. Cool. So yeah. Longer term though, just buy it. Buy it. You won't get the perfect price. You never will. Yeah. Cool. If you're happy to hold once, you're buying once and holding for years. Buying and holding for 4 or 5 years, it doesn't matter whether you buy it now or later because you are going to be so much higher in the longer term, assuming that the fundamentals of Unico Silver Limited are good. If you don't want to do individual stocks because you're like, I don't want to risk that, then buy an ETF. Now, someone said before they wanted me to do, this is another chart request, they wanted me to do something like the silver miners. Okay, now I'm going to show you here. This was the request for SLVM. So this is the Global X Silver Miners. The problem with this one is that it's only just recently been created here on the Australian Stock Exchange, but it tracks the silver mining stocks. And so the best one to show you rather than SVLM is SIL. Okay, so this is the proxy, right? So this is SIL, large cap silver mining stocks. Cool. So basically whatever happens to the SIL, the same thing will happen basically to the SLVM. So that's basically the chart request. So here's SIL and it's looking great. Cool. We had that. Let's see. Let me see if I can. I'll take that off there and I'll take that off there. Nope, Joe, that's not what I wanted. This is on the linear scale, price in USD, $102. So obviously in the massive silver run, this has gone absolutely hog wild as well. We broke through that key level there, right? Good. This is your 1, 2, potentially 3 there. We're going to check. Have we reached any kind of major level? So we'll do the trend-based Fibonacci. Yeah, so we did that. Once again, isn't it amazing how these tools happen to work? Why do they happen to work? Well, because again, yeah, it's a self-fulfilling prophecy. If enough people use it, they trade accordingly. It actually propels the price there. Cool. But I must say there are historical examples way before these modern technical analysis tools where Fibonacci just worked perfectly during the Great Depression as well. So yeah, is it something extra as well? But yeah, you can see here on the weekly, we found exact, basically at the 2.618. Okay, we've sailed through the 1.618. So as soon as we found, I think I've done this before, we found some resistance there. And then once we got through, well, we're through there. So it's not going to hover there again because we busted through 2.618. Now, if you look, you've got a double top on the 618 on the daily time frame. Guarantee you, I'm going to say 100% guaranteed. And I normally do not say that. Here's your double top. You're going to see lower RSI. Lower RSI. I did not prepare this beforehand. See, double top, classic sign. Now, technically, we're not at a double top yet because it hasn't broken market structure. Okay, so here's where we're sitting for SIL. And again, this is a kind of a proxy for the SLVM. Cool. Here's where you would actually be breaking market structure and actually forming what is known as a double top pattern. It's not until you break here. So you've actually got to go, the high. So, that bearish divergence and then break here. that would signal the official double top. So we cannot say yet we have a reversal pattern. It's not in yet. So you can actually just continue to creep up from here. Okay. So watch out. Your key level there is at $91.50 on the SIL. Okay. I can't show you that really on the, well, we'll look at the daily on that one. Yeah. And then you could say, okay, we are probably retracing a larger move. And that larger move is probably going to be from the start of that next bull run. So that's going to be, I would say, from, we'll do it from there to there. So you'd be retracing this move into there. So if this, then that. So let me be very clear. If you break $91.45, you will see a move into the zag zone for the general silver miners. So that's your big kicker, $91.45, and then you would absolutely see 100%, basically a test of at least $82 and probably somewhere into this general zone here. Obviously, if you bounce off here and then head back up, that's the most bullish scenario. But yeah, so watch for that. On the daily time frame, you would need to get and hold for the opposite case to be true. You would want to get and hold through its zag zone, and that is sitting right there. All right, get and hold through. I know this is looking a little bit detailed. I'm sorry, particularly if you're watching this on a very small screen. I apologize. Nothing I can do about it, people. That one. And yeah, close enough for jazz. So get through and hold through $108, $109. Then we'll say that the dip is done. Okay, so get through there and do that. Yeah, that's looking really good. Okay, it wasn't a double top, but yeah, if you get through that $91.50, that's a confirmed double top and you're heading down further. Cool. I remain indeterminate at this stage. So what would that do for the SLVM? Well, that would send that down too. And on that daily, you can see it's kind of similar. I don't know if that'll really work. Yeah, no, I don't have enough data for that. Cool. Yeah. So that's that one. Glad I could help. Any more chart requests? Probably do. Oh, SVLR. Fuck. Okay. Let me go back. It was SVLR, not SVLM. Sure, let's look at that. Where are we, Joe? SVLR. Let's compare it to that. SVLR, what is that? Sorry, but you want to see that. Anyway, it's a similar thing. Oh, it's the same deal. Yeah, same deal. That's it. That's the Spratt Silver Miners and Physical Silver ETF. So it's slightly different, but pretty much the same. So yeah, if you start breaking down through there, then you can see that's a change of market structure on the weekly time frame you'll be looking at. So then you could definitely see it heading down further, probably. So if you break, well, there you go. What do you know? At the 0.382. Once again, isn't that amazing how it works? If you break down through $60, then you could see a move down into that zone there. So that's anywhere from $60 down to about $45. Cool. But then on SLVR, if you start getting and holding through 75, 76 US dollars, then that's a good sign. So there you go. That's for SLVR, the Sprott Silver Miners and Physical Silver. So yeah, if you get through that zone and hold above, yeah, looking really good. Cool. SLVR. Comments, queries? Howdy all. Good. ZBCN. It has been a while since I've done it. Let me see if I have any others. Thank you. Or maybe we live in a simulation. Now, you may say that with a joking thing. I'm actually dead serious. We could actually pretend no one knows 100%. If you're religious, I get it, totally fine. But could we live in a simulation? And your point with that is, you were saying, Anna, is to do with Fibonacci. Why does Fibonacci work so well? It worked so well even in before modern technology and charting tools and all that kind of stuff. It was still a major thing. It works. Why? Is it a golden ratio? Is it to do with nature, etc.? Is it maybe still people back then before modern computing were still plotting the Fibonacci using calculations and slide rules and shit and all that kind of stuff? Quite possibly too. If enough people did. It was a self-fulfilling prophecy, sure. But also, is it a simulation? Do we basing things on general codes and stuff like that? Yeah, it could be. Anyway, it's a bit esoteric. And Neil Han's Dynasty is asking for ZBCN. It's been a while. Let's do it. And I don't have any other chart requests. So sure, let's do that. While we're there, let's take a quick look at, before we do that, let's take a quick look at BTC. And then I'll do ZBCN. Here is Bitcoin. Good morning, Bitcoin. If I've said this before, if you know that following reference, if you know this reference, good morning, Bitcoin, then you are an OG stacker of the crypto. And if you don't know, well, then you don't know. Here is Bitcoin on the daily time frame priced in USD. We're talking 70,350. It's looking very probably more likely at this stage that was a little bit of a pump. Now I got out of that Bitcoin position that I told you about because we started heading back down here. That's not good, right? We start getting through the zag zone, and then we're finding resistance here. Okay, so in particular, now if we bounce through it, fantastic. But right here for Bitcoin is right in there, and we're finding some resistance at the moment. We broke through back into the zone. But so far we are finding it as resistance, at least on the 4-hour time frame. So if you do the following, if you get out of here, okay, you're probably looking at, okay, the start of something quite potentially very large. If it does fall through here, that's just like the silver chart before, right? Get out of there, looking good. Get down through there, probably not that great. Cool for Bitcoin. And then, yeah, probably looking something lower. And that's probably going to be taking it into your 50,000 kind of area. Cool. So pretty crucial buzzword point for Bitcoin at the moment, right? Let's take a look at ZBCN. This is ZBCN. This is Neil Han Dynasty's favorite crypto of all time. All right, an altcoin. Here is ZBCN on the weekly time frame, priced in USD. We are talking, yeah, like fractions of a fraction of a fraction of a cent. And it's been a while since I've done it, so let me get rid of all my drawings. And we'll start at baseline again. This is on the linear scale. So you can see very clearly we've come back to the accumulation range. I love the fact that I can talk about all this stuff now that I've got myself properly educated from Mastering the Markets, masteringthemarkets.com. But let's see here. Look at that. Go away. Why are you... Hang on a second, people. Not right now, thank you. Not now. Give me 1 second. Stop. Live show. Cool. Don't you know I'm going live right now? So here's ZBCN. Got out of the accumulation range, had that massive run. Okay, fantastic. Crypto was doing the crypto thing. ZBCN went really well. And then I remember very clearly, do you remember we showed you here? We showed you very clearly on these time frames. We were going into like the 4-hour time frame. Remember that? And we were talking about I remember all of this. We were talking about complex, well, I didn't even know what that kind of was back then, but it was complex bearish divergence. Okay, so this is where you were having a higher high, and then it formed an equal high. And what did that mean? On the relative strength index, it was doing the following. It was having a lower high, and then on the equal high there, another lower high. So that was complex bullish divergence, and then we had the break of the market structure, which formed the double top, like we talked about before. And then once you got through there, gee, what do you know? Okay, and has not visited it again. Moved down. We probably went, I'm going to guess we went to the zag zone. Did we? Close enough for judge. Yeah, we got into the zag zone here. Fell through the 618. We had that rally, but no. So basically, we're all the way back at the start now. This could be good. Could be good. So we're back at the accumulation zone. Cool. And we're bouncing off it currently. So yeah, this could be good. I cannot tell you in any kind of confident way that ZBCN will continue to go up. Many crypto, because, it's less about fundamentals. Now, I know there are some fundamentals for ZBCN, ZBEC network, but crypto tends to be less about fundamentals and more about hype and narrative. Okay. Could this be just the slow bleed that you used to see cryptos do and just basically they never recover? That's potential. But yeah, you're at a pretty good bottoming period right here. If we look on the daily time frame, yeah, pretty accumulatory at the moment. We're forming a base. That's good. Right here is your base. Good. Nothing telling me yet. So you're completely, totally bearish for the moment. It would not be until we start getting above at least there that you could say we're getting into a change of market structure. You want to see something like that. Okay. Yeah. And on the weekly time frame, similar thing. You want to form on the weekly. What you'll probably do is you'll probably have a breakup of it soon. You'll probably form a lower high, which kind of like descending kind of thing like that. The main thing you need to see is a bullish change of market structure on the weekly time frame. Okay, so what you would want to see, and this is in any chart, if you know a chart that looks like this, okay, you're probably going to get a move up into here. You'll probably find resistance up in here. Then you want to do that, and that is golden. Okay, something like that would be perfect. And let me show you that again. So this is just a lesson in, spotting reversals. Cool. If you see a chart like that, particularly a chart like this, right? It's come back to its accumulation zone and it's finding support there. Great. You've got a downtrend line. The downtrend line probably will be respected. You're making lower highs, well, that was kind of a symmetrical triangle. Lower highs equal lows, lower highs, lower lows. That symmetrical triangle just broke down. Okay, you can see that. If you see the following, comes up, okay, well, it's a lower high, so who cares, right? Higher low, break through there, break through the decline, start making successive, now higher lows and higher highs. Jump in for sure. Right there is your kicker. Through the decline, bullish change of market structure, you would be absolute go time. Cannot say at all that ZBCN will be doing anything like that until you do that kind of pattern. Watch out for that. And even I will go, oh man, ZBCN looks great. Crypto time, general crypto would be going up at the same time. So I'll be deep in ZBCN if it did something like that. So thanks for that. Final comments, and then we get out of here. I think it should go down a bit for a short term. I think silver is going to stagnate and trend down for a while. Okay. Can we check out... Okay, last chart request, and then I have to go for the day because I've got my other stuff to do. I've got to talk to wonderful prospective students at Mastering the Markets. Can we check out EQR? Sure can. Doing it all for free, people. Hit me up with a super chat every now and then. Help the show. That would be lovely. Not saying you have to, but it always helps. Wow. Here is EQR, EQ Resources Limited on the Australian Stock Exchange. Oof. This is on the monthly. Ouch. As in ouch in a good way. I think I've been following this for a bit. Or have I even been following it? No, it's not even on my list. Cool. EQR. What does it do? It's in the non-energy minerals section. So it's going to be in the XMJ and the materials sector, unless it's in the industrials. Let's find out what it does. EQ Resources engages in mineral exploration, mining evaluation, in development. Oh, tungsten. Cool. Focuses on the Mount Carbine tungsten mine. So it's a tungsten miner. Cool. There you go. Tungsten miner. Okay, give me a second. I want to check something. What is the ticker for General Tungsten Index price? Not the TOCA, the ticker, Joe. There is no widely recognized public ticker symbol. Tungsten primarily as, or APT, how tungsten prices are tracked. benchmark. I just want to see what the major indices is doing. Related tickers. Okay, so Tung, TUNG. So let's take a look at TUNG first. You want to take a look at what its base thing is doing before you look at an individual miner. So let's look at that. Tung, American Tungsten Corp. Cool. So American Tungsten Corp has been doing very well since about 2023, 2024. Okay, and EQR has been killing it. So the market cap is a 1.53 billion. Okay, so it's not huge, but not tiny. Shit, doing really well. Cool. So let's do some Fibonacci extension. So you can definitely see here is the accumulation range. You're definitely now in the public participation. So that was the accumulation. Cool. Templates, accumulation. So you're absolutely now, and so that's your 1, that's your 2. Give me a second. We'll go 1, 2, 3, 4, 5. Ignore that. So now you're in the public participation, which has gone absolutely freaking hog wild. So then let's see if it matches up with anything in particular. So there, we'll go from there to there. This might not be perfect because I'm not sure I can call that. My wave count is perfect. Okay, but let's see. What are we looking at? It's at the 4.236. Okay, sure. So it bounced off there. Now I know there's a kind of a lot of lines, so it's like, well, Joe could have, you could have gotten close to any of them. Well, not really. The 4.236, it's 38.40 cents. Cool. A nice decent spike to there. On the shorter term time frame, once again, I'm going to guarantee you that between here and here, you're going to have bearish divergence on the daily time frame on the relative strength index. And you do. Interesting how that works out. So from there and there, which will be the 3rd to the 5th of this little mini wave here. So that's going to be your 1, 2, 3, 4, 5. And now you're in a consolidatory pattern. So on balance of probability, you're probably going to see, I would probably bet some lower prices potentially coming. Okay. So higher low. So not higher low, fuck me, higher high, lower high on the relative strength index. You are creeping up a little bit higher. So yeah, it could fake us out. Let's see on the daily and the 4 hour. You just need to be a little bit careful around here. And look, I bet you, is that sitting around the 0.618? It might be doing so. Yeah, you're in that zone at the moment. Cool. So you're in the zone. You may be breaking out of it. Yeah. So there you go. So you're in that zone. So if you can break so let me put it this way. If you can stay above that 35 cent mark, that gives it possibility that you might be continuing on from here. On balance of probability, you're most likely going to be seeing a further dip from here again. A completed 5-wave move. Probably the correction isn't over, I would suggest, and I think you're probably going to go have some lower prices. And let's take a look at where you could go down to. And that's simply that whole zag zone thing. So where did I say? Now this will be on the short term though. Okay, so let me go from here to here, and I'll show you where we are probably in the longer term as well. I would be very much looking for a retrace in this zone. Probably, let's go back to previous history. Does that line up with anything? Yeah, it lines up with there. So I reckon watch out for that. Watch out for that 25 cent zone. That's looking quite likely at this stage. So at least I would say you're going to get a touch. Yeah, probably going to get a retrace of 25 cents, anywhere down to 16.5 cents, but somewhere in that zone. My bet would actually be here, because I actually like there's a bit of cluster of, because we're in kind of uncharted territory, but I like this cluster all the way back here. See that? Generally in there, that's a bit of price action here, and that tends to, if I were to go like this, joink. Yeah, see that? It lines up really well in that area. So I think, yeah, around about your 25 cents is a good risk to reward. Could it go down further? Sure, but yeah, pretty good. 25 cents would be nice. So what that is then, and get rid of all this because we'll show you. And this, where are we on the larger scale? So we had that Elliott wave, right? So that was your accumulation. This is your public participation that we're in. So that's probably getting close to, if not at the 3, okay, right there. So that's your public participation stage, and a really damn quick one, very quick indeed, public participation. Then we might be, now look, I could be wrong, the public participation could have a lot to go, but it looks like you've done a full 5-wave move there. Now you get the 4, and the 4 is going to take you into that probably that 25 cent kind of zone. That's your 4. Cool. Where are we? Close enough for jazz. And then you get the final 5th wave move like that. So I don't know where that 5th wave could go, but watch out for the all-time high. Yeah, and that's what I see. My crystal ball for tungsten. So yeah, watch out for the previous all-time high, but I think you're going to get a bit of a dump pretty soon. Could be wrong. Now, what it could be is we may not be done. Now, look at that. We may not be done with the public participation phase. So yeah, this could continue up to the all-time high maybe, and then you have a further consolidation, and then the 5th wave takes you higher. But tungsten is probably not done here at all for good. Okay, it's probably in your public participation, and then that's something like that. Cool. That is it. Great. Good. I need to get out of here. And so do you. The last thing I'm going to tell you, though, absolutely is, if you're liking this stuff, if you're liking what I'm doing, if you're finding this valuable from a technical analysis perspective and all the chart requests and all that, well, number 1, subscribe to the channel. That helps me. Number 2, hit me up with super chats, all that stuff. Number 3, buy from my different sponsors and stuff like that, Perth Bullion Exchange for precious metals, etc. But really do highly consider getting yourself educated yourself. Learn to do this stuff that I'm doing right now. Rather than me giving you a fish, learn how to fish yourself. You will walk out of doing a Mastering the Markets course, whether it's the short course of 10 weeks or the year-long course, the comprehensive one. You'll walk out learning how to fish. You'll be a much better investor. Once again, did you go to school for that thing that you wanted to do for, a good part of your life? Yeah, you probably did. You need to go to school, or did you self-taught? Did you get educated in some kind of structured way? Okay, get educated on how the markets work. If you invest in anything, why are you not educating yourself? Every single person in the world who invests in anything, unless you're just simple buy, hold, and then sell later on down the track, I get that. But if you want to sort of move in, even within months or weeks or years, and so months and years, move from undervalued that becomes overvalued, then how do you know when something's overvalued? And then you get into the undervalued stuff. Anyway, you learn how to do this with Mastering the Markets, masteringthemarkets.com. Check out their 2 main courses, Tech 101 and Tech 201. And then you can watch this little video down here. So if you go to masteringthemarkets.com, click on school, watch this video with yours truly narrating it. Okay, we're giving you a little course walkthrough and giving you a student experience tour as well. And then when you want to find out even more, learn from me, get my experiences. That was weird. Send me an email to joe.main@masteringthemarkets.com. You must get yourself educated. The April course intake is open now. It's not that much money for a lifetime of knowledge. Or cool, you are going to, in my humble opinion, make what you invest in that education back pretty darn quickly, I would suggest. I've already paid for my course, the year-long course, which is really expensive, when you look at it, the flat dollar fee, but when you look at it at the time, the lifelong of knowledge, I've already paid for my course with the profits that I've made, and I'm still a student here at Mastering the Markets. Cool. Highly recommend you do. So that is it, people. Finally, I'm going to get you to do a synchronized slurp with me. That's where you grab your tasty beverage. I've got mine. We do it together. Did it at the start of the show. Do it at the end of the show. You're going to get private live stream tomorrow at the Silver Investor Club. I'll put a link somewhere. Didn't spruik it, don't need to. Sells itself really. And all the other stuff that I do in between. Ladies and gentlemen, you have watched.
Good morning, Stacker.
Oh yeah, we're feeling fine.
Good morning, Stacker.
It's podcast time.
That's me. Grab it.
Grab a tasty beverage. Let's get in the groove.
Let's do that.
Synchronize, slurp.
3, 2, 1.
Now we're on the move.
Go.
Good morning, Stacker.
It's got my name on it. Thanks for watching. You're awesome. I'm awesome too. Let's be awesome together every single week. Stay safe, stay informed, keep stacking whatever you're stacking, and I'll see you soon. Bye-bye.